How to invest in real estate with little or no money. When you want to invest in real estate, it is possible to buy a property even if you don't have the cash. Bank loans are the most recognized method to cover the cost of buying a property. However, these transactions can be complicated to process as banks require that you already have a certain amount of money available, which you may not always have. So how can you buy a property with no money in your pockets? By knowing how to use creative financing techniques, such as the following. 1. Turn to private lenders. There are several reasons why you might want to turn to a private lender today. For example, you might not have enough cash in your bank account, or you might have an unattractive credit history. Typically, private lenders' criteria are not as rigid as those of traditional banks. Corporate private lenders, banks do not like poor credit records. If this is your situation, you may be able to bypass the traditional bank and use other people's money. Private lenders can be very useful allies when you want to buy a property but do not have the cash or credit score. Additionally, their processing periods are often much faster than that of banks. Personal private lenders, aside from corporate private lenders, you may have the option of getting a loan from a personal lender. This can be a good friend of yours, a relative or a longtime colleague. In short, anyone you know who might have the cash to complete your purchase. You may even be able to win them over by offering them an attractive interest rate. Extra money is always welcome. 2. Real estate crowdfunding platforms. Real estate crowdfunding works similarly to REITs and REITs. It pools investors' money into a pot, giving each contributor an ownership stake in the dedicated real estate venture. Real estate crowdfunding platforms operate different structures. But there are two main methods to pay investors, which are one-time payments, recurring payments. The main benefit of real estate crowdfunding platforms is the cost of entry. It doesn't require a significant investment, and you can start with as little as $100. This type of crowdfunding makes real estate investing accessible to the average individual and doesn't require investors to take an active role. You can also choose which proposals and trends you want to get involved in, such as sustainable infrastructure investments that have a strong economic, social and governance score. While all investments carry risk, real estate crowdfunding platforms take measures to mitigate risk where possible. They take responsibility for investor funds and act as intermediaries between individual investors and the real estate company. The crowdfunding platform will vet proposals and then present opportunities to you. In most cases, you will receive a certificate of ownership from the crowdfunding platform once you invest. Here again, though, there are certain risks tied to real estate crowdfunding. It's highly illiquid, like most real estate. Some platforms will also charge fees which could diminish your profits. Ideally, it would be best to shop around to see which structure best fits your needs and investment values. Fee-free platforms also exist. 3. Partner up. Partnering is also a creative way of raising funds to buy a building without money. It is a good way to bridge the monetary gap. Combining your talents with those of others can help you find a solution more quickly. This requires a lot of ingenuity. Select the right allies. To establish an effective partnership, you need to surround yourself with people who are as smart and ambitious as you are. They could be real estate brokers, accountants, or renovation contractors. Surrounding yourself with these types of people will make you better equipped for your real estate transactions. It is therefore important to work with people who complement you. Play your role in the process. Establishing partnerships with all of these people also means you need to get on board. To become a successful real estate entrepreneur, you need to surround yourself with the right people. Keeping good business contacts will help you expand your professional circle. In order to achieve this, attend conferences and networking events. This is the reason why I regularly organize real estate trainings. 4. Tap into your home equity. Whether you own an existing rental property or not, you have another financing capacity, your net worth. Also called equity, it is the difference between your home's market value and your mortgage balance. Equity can also allow you to buy a property with no money in hand. Equity is a creative form of financing that allows the homeowner to finance the purchase at a lower interest rate. Unlike other types of loans, the interest percentages of equity are reduced. As you pay off your mortgage, you build up equity which can be used for a second mortgage. This equity then enables you to obtain a new bank loan in order to finance the purchase of another property to make a profit. There are several ways to access your equity. A home equity loan, this is a loan against the value of your home. You will be able to borrow a sum of money based on the value of your home or rental property. The lender will usually allow you to borrow up to 80% of the value of the mortgaged property. Refinancing your mortgage. To obtain a down payment, it is also possible to refinance your mortgage. Refinancing your mortgage simply means renegotiating your mortgage contract.